I'm Matt Bishar with Nareit, here in Hollywood, Florida for Nareit's REITwise, the 2018 Law, Accounting, and Finance Conference. Joining me today is Jim Berry, partner, U.S. real estate and construction leader with Deloitte. Jim, thanks so much for joining us.
Thanks for having me today.
Now, REIT share prices have underperformed and the market's been fairly volatile lately. However, is there a silver lining that you see for patient real estate investors?
Yeah, it is an interesting time in equity markets overall, right? If you look at the last 18 months, it's clearly been historic. And so everything's relative. And so from a Deloitte point of view, and this is something we've actually pointed out in our outlook for 2018, it's really important now to focus on really the historical aspect as well as the long-term aspect for real estate and REITs in general. So the first thing is, comparatively, there was an underperformance. But overall, really a pretty good performance from a historical perspective by the REITs, okay? And behind all that is base fundamentals for most real estate is still pretty strong. So you combine those two things, there was flat to more aggressive or better performing, if you will, equities, but there's still a nice attraction for that nice stable REIT stock.
And what are you seeing regarding valuations that might either spur privatizations or potentially an increase in IPO activity?
One of the things that we've really focused in on, as a lot of people have, is because of some of the movement in the equities, is to continue separation of NAV to share price. And what does that really mean? So once again, when you think about it from the fundamentals perspective, if the fundamentals are there for most REIT sectors, parts of the REIT sectors, then what is that really going to create from an opportunity perspective? A couple. One is, if it's an opportunity for companies to really focus in on their core strategies so that they can better explain to the marketplace in a very transparent way where the value stands and how that's going to be realized. Continue telling the story. The second part of it is when you see that separation, it obviously is going to create opportunities for people to either come in to privatize and create the value that way for the shareholder, or, and the second set of that is for those who might have taken advantage of some of those opportunities and privatized to take it the other way. Now's the time to actually pool some assets and strategically launch them either through spin transactions or separate IPOs from going from private to public, and we've seen a lot of that recently.
And lastly, what impact could President Trump's tariffs on steel and aluminum have on REITs and other real estate developers?
If the tariffs come into play, it's going to be an interesting dynamic and something to really see how's it really going to play out. So at Deloitte, when we see any of that, really what you have to go to, and we would say you go to then, is what's the fundamental economic event that's occurred. Most new real estate commercial construction, you're talking about between 14–16% of the cost is in aluminum or steel. So if prices move, costs are going to move overall for the development. On a general perspective, home building obviously much smaller from a home perspective. You're talking like 1% from aluminum or steel, but overall that's the concern. What is the real impact going to be to overall pricing if this occurs?
Well, Jim, thank you so much for joining us.
Really appreciate it. Thanks, Matt.
For more from REITwise, be sure to visit Nareit's website, REIT.com.